good morning. You're watching ET Now this Friday morning. I'm Anisha Jain. With me is Nikunj Dalmia. And this Friday morning, we're opening up to a very classic risk-off move across the globe. There's a bit of a sell-off across equities, and it's the US 10-year Treasury yields which has spiked as much as 10 basis points. And all of this is having impact back home as well, because yesterday we saw that the market took another tumble. It was another day of slide of almost 200 points coming in, though by the end of the trading session, we managed to recover almost 100 points from the day's low. But if you look at the broader markets as well, they showed a bit of an outperformance because they managed to eke out positive close for yesterday, while the frontline index was on the back foot, and even the cues coming in with respect to the FNO and the FI aren't very supportive. Nikunj, do you think the worst of the drawdown has happened, or do you think we're likely to stay around this range and maybe consolidate for a while?
See, you've got to establish what's happening, right? I mean, now you can look at the market in isolation this week and say, okay, it's been one of those weeks which we've been calling out for. It's been a week of a very sharp reversal. Yes, it's been a tough week to call, and it's a week where you've seen a little bit of skim from the top, but in percentage terms, it's not even 5% for the Nifty. In fact, if one looks at the intraday graph of the Nifty and the Bank Nifty, we did see a mild recovery from the day's low. The broader market closed in the positive. A combination of small and the mid cap index that really closed in the market. So what are the trends telling us? Nifty is adding fresh short positions, and there is long unwinding in the market. If one looks at the Nifty Bank, so it's not that everybody is in a sell mode, so to speak. What has triggered this decline was the decline or selling, or this sharp reversal in the market, I think was overdue, and that has got triggered largely because of global factors. Global factors are not that bad. So I would imagine that market in the near term, at least benchmark indices, are likely to get some support. The support levels are there on your screen. So the way I look at the market narrative, Anisha, is that this trend, this upward momentum in the market, that has hit a pause button. The downside in the market is not going to be very pronounced. The market correction is going to be very torrent. That's a typical bull market correction, very sharp, very swift, and by the time you realize the correction has started, the correction gets over.
Yeah.
A bull market correction is very sharp, very swift, but by the time you realize it, it is actually over. So we are going through a bull market correction. I see the setup moving in the following way, which is the market will now hit what could be called as a range. The downside in the market, or the direction in the market, could be a downward bias. The upside in the market, which is closer to 20,000, I think could take some while before we achieve out. That's a simple sum and summary. I'm not scared with the fall, but globally, since things are not falling apart, the downside in the market, I think, will get limited and restricted. I don't think this is a time to buy it. Let the market settle down, and I think the market will settle down in a few days.
Okay, so that's the clear commentary coming in, that it's still a bull market correction. It might be a bit sharpish, it might be a bit swift, but that's still the bull market correction. Not the best time to buy right now, because let it consolidate, but nonetheless, the market might be in a slow grind. And it's the global market as well, which is in a slow grind, and that's what we have seen for the last trading session. The US market has been on the back foot. Yesterday as well, we saw a close of around, a cut of around 66 points on the Dow Jones. But separately, what is making the biggest headlines across the globe is the fact that the bond yields have spiked quite sharply, and that's the biggest headline, of course, Nikunj. We have been talking about how the last 1 month as well, the bond yields have been inching higher, but overnight there was a very sharpish move, 10 basis point higher on the 10-year yield, and telling you that there is a bit of a risk-off sentiment, and now getting a thumbs up from even Warren Buffett, who's going ahead and buying 10 years.
No, so let's understand what's happened in the 10-year paper. I think the bond yield, when it moved in 2022, it had peaked out at 4.4. I'm talking about a 10-year paper. Now it is at 4.1. But the underlying inflation and the growth dynamics, I think, were completely different. And with bond yields moving at 4.1 largely because of what's happened to crude prices and Fitch rating, I think it's a slightly is slightly exaggerated. So this kind of a spike in bond yields is unlikely to sustain, at least that is my view. But you got to be a bit watchful, because when bond yields it starts moving higher, automatically it means that this whole narrative that inflation has peaked out permanently and interest rates will go down in a hurry, I think that narrative will get clearly challenged. I don't think there is anything to be scared about the setup, but you got to be a bit watchful, because that risk on trade, which had in a sense contributed to a parabolic move in US equities and a lot of other asset classes, that will get challenged, specifically to Buffett. Now, of course, this is something what he's spoken to global media in a written statement to a lot of global media. Buffett has said that I dismiss what Fitch has said. I continue to maintain that dollar will be the reserve currency. And in terms of a Berkshire Hathaway commitment, we bought into bond yields. That means that they expect the 10-year paper somewhere or the bond yields actually to come down. So that is the view which is coming from Buffett. So frankly, the Fitch episode, what we thought was a no event, and now the who's who of the US financial world, they've actually dismissed it. They've completely shrugged it off. But what that entire episode or that entire communication has done is that it has given a spike to the bond yield, which surely will have an impact both in the short term and the near term on growth stocks, on risk on assets, and how essentially a little bit of liquidity would move.
But one risk on and growth stock which is not showing any sign of slowing down is definitely Zomato, right? Because you're talking about growth stocks, so that's the stock that comes to my mind, Nikunj. What a stellar performance that the company reported yesterday. First time ever reporting profitability. Yes, it was a meager 2 crore, but for the new age tech world, just the fact that they've managed to report profits was a big takeaway. And all of this has been liked by the street as well. If you look at the brokerage commentary this morning, that was also quite positive. CLSA has maintained the buy. They've maintained the buy stance. They've hiked the target price to 105 now. They're saying that the delivery on profitability is well ahead of time. JP Morgan is also maintaining that view, and they too have hiked the target price by 10 rupees. Do you think, Nikunj, this could be another re-rating trigger of Zomato? Because of course it's run up already from 45 to 90 almost. But from here on, could it now see further re-rating?
You know, it's early Diwali for Zomato shareholders, and you got to doff your hat off to Dipinder Goyal and his team, that for a company, for a business where everybody thought that they will never ever make profit, the fact that they've been able to turn around the business. See, growth was never a problem for Zomato. It was about how are you essentially growing and what kind of cost efficiencies you are essentially putting at bay. The fact that they have a cash-rich balance sheet at a time when you got the real threat which is coming from ONDC, you managed to grow and you managed to cut corners. Zomato has turned profitable. I mean, that I think is a different kind of a narrative now. So the narrative for me, for Zomato, is now very simple. Same time last year we were asking, will they ever make profit? Now the narrative is, how much profit will they make? In the forward guidance, they've indicated a growth of 40% for next 2 years, which I think on that kind of a base, I think is very commendable. So the narrative now changes for Zomato. From what was the narrative for Zomato? Okay, it's a high growth business, but we don't know when will it make when will it make profits. Now the narrative, it's a high growth business where cost efficiency has kicked in. The 3 engines are kicking in very smartly, which is the food delivery, the dine out business, and also the Blinkit business or the grocery business, and now they can really grow. Anisha, once you understand the dynamics which are in your favor in terms of cost efficiency, size and operating leverage, it's a high growth business where things essentially are going to be completely different. Now stock has done up. Everybody is excited about in terms of a 15 rupee price target up or 20 rupee price target up, but I don't know what will happen today because of the recent run up. But directionally, I guess this, we've been talking about it. Our thesis was that this business will come back. I think the business is making a comeback. But does that mean that all other consumer fintech companies will bounce back? Is there hope? Is there a belief that what Zomato has done, can other consumer and fintech companies will do that? I think that for me is the bigger narrative. Can a Paytm do it? Can a delivery do it? How soon Policy Bazaar is going to be walking on that path? So now there is going to be a belief which automatically will come by markets that, okay, these guys know how to manage cost. They understand the profit, language of profit. And a lot of, the old timers in the market, they've simply dismissed these guys off.
Yeah.
Oh, great growth, but show me the money. My friends, it's time for you to realize that for some of these companies, not all, the promoters are capable of turning the ship around. I think for me that is the biggest hurrah.
Yeah, because you're right. There was, I think, yes, that's the best way to look at it in terms of the overall sector, whether the profitability will return. Because people had written off whether these guys are just entrepreneurs who enjoy doing their business, but they're not that concerned about profitability. They'll burn out cash because they've been getting a lot of liquidity. But now there's a semblance of being very, very cost efficient, and that's what was visible in Zomato's number. Not only the top line was strong, even the cost that they managed to control was definitely something, and probably that will be the read-through for the rest of the sector as well. But